banks, they're these massive buildings that are just built to look like the absolute safest place on earth for our money. But if that's really true, how can they just disappear sometimes in a matter of hours? What really makes a bank fail? Let's get into it. I mean, think about it. Everything about them just screams permanent. You've got these huge concrete buildings, the super heavy doors, the quiet, serious atmosphere inside. It all projects this image of unshakable strength. It's totally designed to make you feel like your money is locked away safe in a fortress. And yet that fortress can crumble. A company that's worth billions one day can literally be gone the next. And that's the real mystery we're going to unpack here. How does something that seems so solid, so permanent, turn out to be so incredibly fragile? Okay, so to get to the bottom of this, we've got to start with something most people get wrong about banks. See, their most fundamental job isn't just storing money, it's actually creating it. And right away, this probably goes against everything you've ever thought about money. Most of the money in our economy isn't actually printed by the government. Nope, it's what we call bank money. These are digital entries that are basically created out of thin air every single time a bank says yes to a loan. Let me break it down with a simple example. Let's say you deposit $10,000 into your account. The bank then takes that money and lends it to your neighbor who's buying a new car. Now, here's the magic trick. If you check your account, your $10,000 is still there, but your neighbor also has $10,000 to pay for the car. Poof, the original amount just doubled. That is money creation right there. So how is this even possible? Well, it all comes down to a bank's balance sheet. On one side, you have what are called assets. That's money the bank is owed, like all those car loans and mortgages. On the other side, you've got liabilities, and that includes your deposit. That's money the bank owes back to you. And the entire business of banking is just this really delicate balancing act between these two columns. But here's the catch. This whole brilliant system of creating money, it has a huge hidden flaw baked right into its DNA. And understanding this flaw, well, that's the key to understanding why banks fail. And this is it. This is the flaw. A fundamental mismatch. A bank's assets, the money people owe them for houses and cars are all long-term and they're illiquid, which is just a fancy way of saying the bank can't get that cash back instantly. But their liabilities, that's your bank balance, are super short-term. You can walk in and demand all your money back right now at any moment. Now, you might be thinking, isn't there a safeguard for this? And yeah, there is. It's called bank reserves. Regulators like the Central Bank of Brazil or the European Central Bank, they make banks keep a certain fraction of all deposits on hand in actual cash. This is supposed to be a buffer for a normal day's withdrawals, but this whole system, this entire buffer, operates on one single gigantic assumption that we're not all going to show up and ask for our money at the exact same time. And that leads us to the $1 million or, maybe the $1 trillion question. What happens when that core assumption completely breaks? When everyone's trust evaporates and they all want their cash right now? Well, what happens is something that's really more about human psychology than it is about spreadsheets. It's called a bank run, and it is the single most effective trigger for a bank's total collapse. This is exactly why a bank run is so devastating. Just look at the difference on this chart. In a country like China, you have over 300 trillion yuan existing as digital bank money, but only a tiny, tiny fraction of that exists as physical cash. And it's the same story in the United States, in Brazil, in Europe. There simply isn't enough physical cash in the world to pay everyone back at once. It's a mathematical impossibility. And here's the craziest part about it. A bank run is what's known as a self-fulfilling prophecy. It doesn't even matter if the bank was in trouble to begin with. If enough people simply believe the bank might fail, they'll rush to get their money out. And that collective action, that panic, is what actually causes the bank to fail. The fear literally becomes the reality. And the way these runs happen has changed big time. You know that classic image right from the Great Depression? People in long panicked lines snaking around the block. Well, today it's digital. A rumor starts on social media, spreads like wildfire and group chats, and suddenly you have people pulling out billions of dollars with just a few taps on their phone. And if you think this is just theory, look no further than Silicon Valley Bank in 2023. This was a textbook digital bank run. On a Wednesday, some whispers started online. By Thursday, one day later, customers tried to pull out an incredible $42 billion. By Friday, it was over. The government had to step in and seize the bank. It happened that fast. And look, this wasn't some one-off thing or some weird relic from the past. This fundamental weakness in the banking system is a global risk, and it is very, very real today. Just in the last couple of years, we've seen this play out all over the world. There was Silicon Valley Bank in the United States. Then you had Credit Suisse, a 167-year-old Swiss institution brought to its knees just days later because the fear spread. And over in China, rural banks in Henan province just froze withdrawals, sparking massive protests. In every single case, the details were a little different, but the root cause was always the same: a sudden total fatal loss of confidence. So when you boil it all down, it's not just bad loans or risky investments that make a bank fail. It's the collapse of the single most important asset a bank has, an asset that doesn't even show up on its balance sheet, our trust. Because the entire global financial system, from the fanciest bank headquarters to the app on your phone, it all rests on one simple fragile belief that tomorrow, when you ask for your money, it will still be there. The moment we stop believing that, the whole fortress just turns to dust.
Nelle sorelle sul gossip che